is likely to weaken a bit, and there's just not a catalyst necessarily for other parts of the market.
All right, we'll leave it there. Yeah. Good conversation, everybody. Samir, we'll see you
Thank
soon.
You.
Good hockey, right here on the
good
desk.
hockey analogy, Samir. That was a good one. Well played.
The Stanley Cup final could be ending soon. We'll see. To Pippa Stevens now for a look at the biggest names moving into the close. Hi, Pippa.
Hey, Scott. Well, shares of Roku are surging after announcing an exclusive partnership with Amazon.
¿Cómo están? Seguramente ya se debe de ver. Vamos a checar acá. Actualizar. Hace mucho frío, ¿no? Listo. A ver.
Are surging after announcing an exclusive
Listo, estamos en directo. Veamos esto y bueno, no. Pasaron varias cosas, hace mucho frío. Y quiero hacer un café, pero ahorita veamos esto primero, antes de empezar.
Pippa, thank you. Pippa Stevens, we're just getting started here. Up next, more on the market snapback today with Mohamed El-Arian of Allianz. We'll find out how he's sizing up the uncertainty in the Middle East, what he thinks about the G7 and the Fed. Remember, we talked to him in the midst of that big sell-off on Friday. We've been able to absorb that a bit. We'll talk to him now on the other side. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Okay. Vamos a tener una plática sobre uno de los trabajadores de Allianz que tiene acceso a las entrevistas con la CNBC. Mientras, el rally de hoy se desaceleró. Vean, caída. Tesla, ¿dónde está? Tesla se mantiene, o sea, algo está pasando aquí. Es el único gráfico y es de las únicas, de las Seven Magnificent, todas las tecnológicas, es la única que se mantiene todavía a flote. Mientras todas las demás ya se cansaron y cayeron, como lo vimos en el directo anterior, Tesla sigue aferrándose a mantenerse, o sea, no cae, no sube, se mantiene. Eso es un comportamiento muy extraño de la bolsa. Changos. Ya son varias veces que veo mis videos y uno sí se ve, pero el otro no. A ver. Vamos aquí. No se ve. Genial. Porque lo que yo quiero es publicarlo, pero no me deja. Como sea. Bueno, ya hice lo que tenía que hacer, los informes, me falta todavía, tenemos que hacer el inicio de la semana, los diarios semanales. No es la gran cosa porque pues, o sea, es lunes, está muy relax el día, bastante relax, excepto por la emoción eufórica de los mercados ahorita en la mañana. Pero de ahí en fuera todo bien. Reportes de ingresos no tenemos mañana ni el miércoles. Esta semana está relajada, aunque el cierre del viernes había dicho que iba a estar movida por lo de Irán y Irak, más lo que se viene con la Fed. La inflación está aumentando ahorita, entre otras cosas, pero bueno. Un activo barato, el objetivo. Busquemos un activo barato. G puede ser porque su mínimo anterior fue 43 hace 3 sesiones de mercado. Tech L no lo sé. Tengo mis dudas porque tiene que seguir avanzando la tecnología y la última vez que estuvo su máximo histórico fue en 90.81, entonces no lo sé. Habría que esperar. Por otro lado, tenemos los índices en TNA. Desaceleró, down, desaceleró, pero se mantiene igual que Tesla. O sea, es un comportamiento similar a Tesla. Y tenemos Supro que sí de plano desaceleró. Por eso, debido a estos comportamientos de los 4, considero que Triple QQ es el mejor que se maneja en este tipo de contextos. Ahora, dejando de lado lo que ha pasado en esta sesión, vean, el mapa del mercado sigue muy verde. Palantir, 3%, 2%, 2%, 1.5%, 2%. O sea, ha sido un buen día en bolsa, por supuesto que sí ha sido un buen día. Veamos.
Given we still haven't had a resolution to what's happening in the Middle East, but the market certainly is taking it better.
Yeah, I think 2 things happened today, Scott. One is behavioral. The market has learned to fade geopolitical shocks because it has worked. And the second was the report you mentioned out of the Wall Street Journal saying that there are indications that Iran is looking to de-escalate, is looking to negotiate. I think, ironically, on the ground, things have gotten worse, not better. So you have this contrast where the market is looking forward and the market has learned to fade these sell-offs. The question is going to be, is this time different or not? And I can't answer that question. I don't think anybody can answer that question.
No, but if judging from history, investors have been correct more times than not to do what you just said, to fade the dark headline and look on the other side.
Yeah, and one of the reasons why they've been correct, and you mentioned it, is because there was a sense of someone coming in, and that someone was the Fed. And the Fed is in a very different place. Inflation has sidelined it.
Aquí dice, acciones incrementan sobre el relief. Ah, olvidé que relief. Vamos a buscarlo. Relief en español. Alivio. Ah, ok. Acciones incrementan continuamente con el alivio de Israel-Irán. Ok. Eso significa que cuando lleguen a un acuerdo tal vez suba más la bolsa. Todavía no se anuncia. Además, qué curioso que haya empezado el ataque antes del G7. O sea, les digo, o sea, la bolsa no se cayó por eso. El viernes sí aumentó la volatilidad, es verdad, pero no hubo como que una gran corrección, porque era lo que les decía, o sea, tenemos menos 1% en los índices. Es como ver aquí menos 1% y menos 2% ya era para, ok, vamos a voltear a ver la situación, pero no, o sea, pasó y luego regresó. Y desde las 12 del día hasta las 12 se fueron a verde. O sea, nada grave.
We don't know what to do. Our dual mandate are going in a different direction, and we don't know which one to respond to. So I think of it as more being sidelined by uncertainty rather than being actively happy to be on the sideline.
Which do you think they would respond to if there's friction between the two, which the chair has said multiple times was always going to be a risk? They would err on the side of a labor market weakening further, wouldn't they?
That's what I would have said a year ago. Today, I'm not so sure, because now we have the whole issue of Fed independence that has come into this. But a year ago, I would have completely agreed with you. Now I think they're going to be somewhat more balanced, also keeping an eye on the inflation side, because they do not want to be seen as being forced to cut by the president.
No, I understand that, but why would they be seen as though they were doing that? I mean, the inflation data, it's not like it's running away. The recent reads were not bad at all. Yeah. So why would this all of a sudden become political or politicized if they actually did cut rates because they could?
Scott, we've been discussing this for a while. No one quite knows the following. Have we seen the impact of the tariffs, which was nothing to see, or are we about to see the impact of the tariffs? Depending on which company you speak to, you get different answers. Those who don't have pricing power tell you we just can't pass on the prices. The others who have pricing power say it's coming. We are running down the inventory that we got before the tariffs went up, but wait for the summer. So we got to wait and see, because that's the balance between those with pricing power and those who lack pricing power.
The other point you make is, concerns that the consumer is either weakening now or will weaken at some point. I'm wondering, when you see what Goldman Sachs said today, that 49%, households allocate 49% of their total financial assets to equities, the highest level on record. Does that play into your calculus at all? If not, should it? We're in less than 2% away from an all-time high on the S&P 500. If households are allocating nearly half of their total assets to equities, which continue to elevate, maybe the consumer's in far better shape yet again than people want to give it credit for.
Yeah, and that's what the economists call the wealth effect, that you feel wealthier because those 49% have gone from record to record. And as you point out, it's amazing to think from the April 8th lows, we're only 2% from the highs. It shows you how resilient this equity market is. It also shows you that the corporate side of the economy has been doing rather well. And that's the US magic that we've seen over and over again. But if you look at the consumer, if you look at the current income expectations, if you look at how hard they've been hit by inflation, if you look at the savings for the lower income, there isn't that much there. There's been a lot of resilience used up in recent years. So we're going to see, I've argued over and over again, we're not going into a recession. Will we grow at what the Fed is saying as 1.7%? The market consensus is 1.4%. If we stay above 1%, then we're fine. If we go below 1%, then we should start worrying.
Mohammed, I appreciate it as always. Always enjoy our conversations. We'll have another one soon, I'm sure of that.
Thank you.
Mohammed El-Erian. Coming up next, the next wave of the AI revolution. We're going beyond big tech with one investor who says the next trillion-dollar opportunity is in one of this year's worst sectors. We explain next.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to
Pues nada grave. La verdad es que ahorita está tranquila la sesión. Vamos a checar. ¿Qué hay de trending aquí? Como antes en Twitter se decía trending topic. S&P 500, Nasdaq, Tesla. Shad, esa debe ser una cripto o parece cripto. Palantir. Nada más. Ok. Equities. Lo mismo. Trending. Lo mismo. Y en cripto, a ver, en cripto, ¿quién está en trending? Trump, le hicieron una cripto, no puede ser. No me enteré. O no recuerdo haberlo visto. Trump for President. No, bueno. Bitcoin en cash. Vamos a checar, es que sí está aburrido. Luego sí llega un punto, pasa, en el que uno está aquí sentado, pues sí, gestionando que los portafolios, que las carteras, que mide el riesgo, que corre el buy y ese tipo de cosas, ¿no? Pero la verdad es que luego no hay como que grandes noticias, así como un día como de, wow, tenemos que movernos, miren. Eso fue en la mañana, o sea, sí pasó, claro que pasó, pero fue en la mañana. Y duró como 2 horas y media, 3 horas a lo mucho. Ah, Ethereum, $87, pero ya cayendo. Ok. Y Tesla se mantiene, ¿ya vieron? O sea, ahorita todo indica que se va a caer. En el postmercado puede que se caiga, pero vamos a ver. Y de acciones favoritas, Meta, Netflix ya está subiendo por fin. Enphase Energy ya. O sea, de hecho ya debió de haberse vendido, pero no sé. Vean, 46. Se pone interesante. Enphase. Miren, Bull subiendo ya, recuperándose. A ver. Su mínima 10.18. Ok. A ver qué tal. Vamos a ver esto.
Act together. And so, one way or the other, we don't have a choice but to win.
We're still in the very earliest stages, and with all of the excitement and potential of generative AI and agentic AI, we think that there's lots of opportunity for us to expand our infrastructure globally.
If you think about all of the tech that we need to be invested in, it's going to be autonomous vehicles, EV, power, AI, robotics. I think those 5 themes are really going to take us through the next decade.
We have the AI super cycle. We've seen a re-acceleration in both the top line and the earnings. Oracle reported last night, blockbuster numbers. 80% of the S&P that reported all beat. The Mag 7 all beat and accelerated.
Every single company here pushes the cutting edge forward. They understand that there is room for a tremendous amount of growth throughout the entire ecosystem.
Our many headliners over the past week thinking about what the next wave of the AI revolution will look like, and most importantly, how to invest in it. So is our next guest. Jeremy Cotter was an early Facebook employee, now hunting for the next big thing as a venture capitalist. He's also a partner at URise Health. It's good to see you. Welcome.
Good to see you too, Scott.
Explain what URise Health is first and foremost.
URise Health is an investment firm that invests in the most promising AI health companies before they go IPO. And our purpose is to help over 1 billion people improve their brain health and longevity, including those people that are watching today. So the firm was founded at the intersection of my professional and my personal life. Professionally, I was at Google and Facebook, and I was a healthcare executive. Then I got a call out of nowhere that my mother was diagnosed with a neurodegenerative disease. Just devastating news. But that was exactly what fueled the success of URise.
And you think that when we talk about these next major areas or sectors that are going to be dramatically impacted by AI, your focus is now squarely on healthcare?
Scott, that's right. Research shows that in the US, healthcare is a $4 trillion market, and globally it's $21 trillion. That's more than half the size of the US and Chinese economies combined. And yet, as you've seen, healthcare is just getting slammed on the S&P right now. But that's exactly why AI is poised to transform it. In 1885, the X-ray was discovered, and for the first time, we could see inside a human body. Now, with AI, for the first time, we're able to see inside massive data sets in a way that's going to completely transform both the cures and the therapies that we have.
When you say that healthcare is going to be one of the pillars of the next wave, who is going to get there first in the most dramatic way, do you think? We always talk about the hyperscalers, of course. CNBC.com reported late last week Amazon reorganizing its healthcare business into 6 pillars in order to simplify its structure. Where do they factor in? Where do the other big companies factor in the way you see this race evolving?
Absolutely. Let's start with Amazon. Here's why they're poised to win, is they're an ecosystem. It starts with a $3.9 billion acquisition of One Medical. That's a physician group that's got doctor's offices in almost every major US city. Why does that matter? Because it gives Amazon direct access to doctors in a way that very few tech companies have. But that's just one piece of a much larger strategic play. Amazon acquired PillPack, an online pharmacy. They have retail stores like Whole Foods. So you can imagine, Scott, you have a telehealth visit with One Medical. They help you in half the time with none of the paperwork because of AI. And then you, from the convenience of your own home, you order your prescription medication, and then you're able to go to Whole Foods with AI recommendations. That's the journey of Amazon, all powered by AWS, Amazon Web Services, which is the computing infrastructure. So that's the ecosystem that we're talking about. But let's not discount NVIDIA. NVIDIA is the picks and shovels behind all of this. They're powering all of AI health. And for that reason, they're doing things like looking at bone scans, MRIs, and analyzing them and making sense of them in half the time with twice the accuracy.
So when you step back and you just look at the landscape overall, how do you think about your former company, Facebook, now Meta, obviously, which the stock has done?
Nada importante, pero están hablando de cuál será la siguiente batalla por la inteligencia artificial en salud. Y están hablando de Amazon, de que está actualizando sus servicios de enviar medicamentos a casas. Entonces, utilizar la inteligencia artificial para saber cuándo un paciente o un cliente va a necesitar su medicamento como insulina o yo qué sé, el que toma Doctor House, ¿cómo se llama? Vicodin, o sea, entonces la inteligencia artificial va a decir, pues, ¿sabes qué? pues ya le toca a Mengano y a Pepito, sus medicamentos se los llevan. Y en dron ya sería otra cosa, ¿no?
So then they scale back and start to slow down. Now they're jumping back in with a massive investment in AI that's putting them back into a position of leadership.
What about Apple? I mean, where do you see it? I mean, a company that has made a huge effort as it relates to people's health, and they're trying to get their AI story right. How do you see that?
Absolutely. You know, it's interesting you mentioned that because Apple's strengths are also its weaknesses. Apple, unfortunately, has underinvested in AI, but you get devices like the Apple Watch, amazing at measuring all kinds of biometric data like fitness and sleep. And yet, they're doing that in a linear, rule-based way. If someone falls, they can measure whether they fall. But they're not analyzing or predicting the next fall. And so, with 2.3 billion devices that people own, Apple devices, this is a huge opportunity that's being missed. And again here, strength, privacy, but that's also their weakness because they're not able to bring together these different data sets. Again, Apple is strong on the consumer side, very strong, but they're weaker on the enterprise healthcare side. Amazon and Nvidia have inroads into healthcare organizations and hospitals, but Apple does not. So we're seeing a company that had potential, but is losing out on the AI race because of that.
All right. Thanks for coming by. It's Jeremy Cotter. Appreciate spending time with you. Coming up next, we track the biggest movers as we head into the close. Pippa Stevens is standing by with that. Hi, Pippa.
Hey, Scott. Well, one beauty stock is looking good to investors. The name that's up double digits coming up next.
Es para hablar sobre tu...
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
My plane has mechanical problems. I'll try to get there as soon as I can.
Y al rato baneado por la música del comercial. Pero bueno, a ver. A ver qué tiene Schwab. Charles Schwab.
Welcome back to Market on Close. I'm Marley Caden. Now it's time to discuss crude oil prices. They seem to be easing as investors are optimistic the conflict between Israel and Iran may remain contained, but have been volatile over the past few days. I do want to bring in Scott Bauer, the CEO of Prosper Trading Academy. Now, Scott, take me through your thoughts on today. We've seen quite a move in our crude oil futures.
My thoughts are pretty much the same as the traders behind me here, very perplexed. You know, maybe the run-up that we saw at the end of last week was a bit too much, but I think that every person that I spoke with over the weekend, given the escalation of what happened, would have expected crude significantly higher. And we did see that, you know, earlier, but now it really doesn't make any sense to me. Maybe the market in the traders are buying into the headlines that maybe, you know, the stance is going to soften on both sides here, but so far there's been nothing but escalation. Now, if you break down crude to the fundamentals, if there was not this big geopolitical event, you know, we'd probably see crude back in the lower 60s, maybe in a 50 handle, honestly. But at any moment's notice here, we know what can happen. We know about the Strait of Hormuz. We know about, you know, production being potentially cut off. So for right now, I do think this is a buy the dip, but only until this situation has resolved itself. Once this fracas, whatever you want to call it, is calmed down, and let's hope it's sooner rather than later, I think there's going to be a big sell in a crude.
So with that dip, you mentioned the potential for a $50 mark. You know, that's pretty close to where the Trump administration wants to see the price of a barrel. But oil prices, are we potentially going to see a breakout in the near term, you think? Could we hit that $80 mark? Because like you said, we're hearing reports that there might be some potential to ease the escalation, but we haven't seen any concrete proof of that.
No, we haven't seen any proof of that at all. In fact, if anything, we've seen the rhetoric ratchet up. I know Iran, just a short while ago said that they're going to rain down missiles in Israel like nobody's ever seen before. So you don't really know what to believe. It is definitely volatile. It is difficult to trade, and anybody trading this, you've got to be able to use some stops. If things escalate, you sure could see an 8 handle. I don't think that's going to happen.
And I know right now we're sitting pretty near to that 200-day EMA. Do you think that that's driving even more attention to crude right now as well?
It probably is, but again, I think anybody that looks more at the fundamentals and technicals probably has to be on the short side of this. Again, when there's a development like this, historically, this doesn't just go away in a day or a week. So I would expect the 7 handle, the 70 handle to really remain here until there's some concrete evidence that maybe, there is some de-escalation here. But again, longer term, I believe crude is absolutely a short.
And speaking about that longer term, I noticed a lot of people buying protection, a lot of call options out of the money, trying to get protection against that real escalation. Do you think we'll continue to see that kind of action?
Well, wow, last week there was a lot of activity in upwards of the 130 strike calls going out July and August. We're not seeing that so much right now, but I do think that, everybody wants to have some protection on both sides, up and down. So that call buying, which was robust last week and volatility really exploding, that has calmed down a little bit. I would expect there to be more call buyers coming in.
And I do want to transition us here to Bitcoin. We do have to talk about them clawing back some of its recent losses. Last I looked, they were trading about north of $108,000. What are your thoughts on Bitcoin action today?
This definitely has been a buy the dip recently, with volatility in the crypto space and Bitcoin specifically so low. Something to keep an eye on is volatility is picking up. Typically when we see volatility really escalate in Bitcoin and the crypto space, that is the precursor to a very big move. And with the buy the dips that we've seen, 105 has really held has significant support over the last several weeks or so. So with volatility picking up, it would not surprise me if we see Bitcoin challenge those all-time highs and maybe even break them sooner rather than later.
You're not the first person who said that to us, Scott. You're not alone in that opinion. Thank you so much, Scott Bauer, the CEO of Prosper Trading Academy. And coming up, we will close out this market session. We'll get the big picture from the team at Charles Schwab. We'll discuss today's trading session and look ahead to this week's Fed meeting that kicks off tomorrow. Market on Close, we'll be right back.
Miren, ya viene la Fed. The big picture. Panorama completo. 10 minutos al cierre de bolsa y miren, parece que se está delimitando una línea aquí y otra una hacia abajo, una diagonal hacia abajo y una hacia arriba. Se está delimitando el precio. El tema es qué va a pasar. Ahora otra cosa, Netflix también, no, bueno, estaba en $11, ahorita ya bajó. A ver, vamos a ver el Nasdaq. Vamos a Nasdaq. Igual como que quiere bajar. En estos casos donde digo, utilizo liquidez y compro o mejor esperamos. Y así como pinta la cosa de que esto se quiere caer por la vela que marca, Netflix también está desacelerando y Tesla está conformándose en una tendencia bajista, aunque todo puede cambiar mañana, porque no sabemos qué vaya a pasar con Irán y con Irak, con la reunión del G7 también. Entonces son varias variables. Algo que nos ayuda y nos cubre de todo ese riesgo es la volatilidad, que es Hay un grupo de acciones, como de 20 acciones compradas en $53, como por... No, esperen. Como por aquí, 53. Y otro grupo comprado en 55. ¿Qué estamos esperando? Que pase algo malo, algo que asuste a los mercados, para poder vender esa volatilidad. Y de esa volatilidad, pues se va a sacar un rendimiento. Eso es como su función es cubrir el riesgo en caso de que las acciones disminuyan su plusvalía, su valor. Bueno, no plusvalía, su valor. Entonces, veremos. Hace mucho frío y por acá por mi casa está lloviendo, entonces no sé qué onda con eso. A ver, espérense. Vamos aquí. ¿Está lloviendo? Sí, sí está lloviendo. A ver. O sea, aquí me dice que está cayendo un aguacero, que va a llover toda la tarde, de hecho, todo el día. Y mañana también va a estar lloviendo, pero desde temprano, desde las 9:10 de la mañana. Yo lo que espero es que el miércoles deje de llover más o menos, porque tengo que salir ese día. Pero pues a ver qué pasa. Vamos a ver qué pasa antes del cierre. ¿Qué?
See the economy evolving over the next handful of quarters and years, and then what that means for their actual Fed policy projections, the so-called dot plot. What will be really interesting is how the inflation outlook has changed, if at all. Because if we go back to the last time we got an updated summary of economic projections, because inflation remained sticky at the time, the median projection for the year-end core inflation rate was revised higher. But what we've seen over the past few months is that it seems like the disinflationary trend has resumed. So it's going to be really interesting to see how those play out and if they end up revising lower their inflation expectations and therefore what that means for the path going forward.
So summary of economic projections, very important. And of course, constantly talking about the dot plot. Explain the importance of the dot plot, because I think it's the less discussed thing that everyone's focusing on right now, but obviously a paramount importance.
The dot plot's very important, but we always like to highlight that a lot can change over time. It's not a forecast from Fed officials. It's basically the projection based on where each official sees or expects the economy to be at a given point in time down the road. So you have to look at both the economic projections and the dots in concert with each other, because it's those economic projections that therefore result in what the Fed officials expect how restrictive or accommodative Fed policy to be at a given point in time down the road. Now, if we go back to the March meeting, we saw a pretty tight dispersion of where Fed officials saw rates being at the end of this year, at the end of 2025, where the median projection suggested 2 rate cuts by year end, but there were 4 officials who were expecting or were projecting no rate cuts, and 4 officials who were projecting just 1. So there was a pretty large number who weren't seeing an urgency to do anything, or if they were seeing, basing their expectation on what they would do, a pretty minimal cut. So it'll be interesting to see if the number of cuts gets revised down a little bit from a medium standpoint, and if the median dot projects just 1 cut by year end. I'm not sure it'll change too much, because as it stands in the here and now, we've started to see somewhat of a slowing in the labor market. Nothing that's too concerning just yet, but the pace of job growth and job gains has slowed. But more importantly, on the inflation aspect of the Fed's dual mandate, there's been a lot of concerns about what the tariffs might mean for inflation going forward. But what we've seen so far is that services disinflation might actually offset that. And that's not necessarily a good thing. That means slower consumer demand and maybe potentially slower growth down the road.
So you mentioned the inflation piece of the Fed's dual mandate. How do you think right now the inflation piece is comparing with the employment piece? And is the Fed weighing one more heavily than the other?
You know, right now, I wouldn't say they're weighing either more heavily than the other, because if you look at both independently, neither necessarily suggests the Fed should be doing anything. If we look at the labor market, for example, we've seen an increase in the unemployment rate from the lows of 2023 and 2024. We were as low as 3.5% or so. Now we're back up to 4.2%. I think that's a key reason why the Fed ended up cutting rates by 100 basis points last year, because of that weakening in the labor market. But over the past 12 months, the unemployment rate has traded in a very, very tight range. It's been between 4% and 4.2% for 12 straight months. So that suggests that Fed policy is probably in a good place right there. Fed doesn't need to do anything. If you look at inflation, it's come down off the highs, but then it kind of leveled off for a little bit. And we saw inflation readings in the 2.5% to 3% for most inflation indicators. That also suggested that the Fed was probably right in backing off in their policy last year and cutting rates. But because we've held steady, it makes the case that they should probably hold rates where they are for the time being. Now the question is what happens over the next handful of months, because the disinflationary trend that I mentioned before, it seems to be back. And if we look at core CPI, for example, we've had in 3 of the last 4 months a monthly reading of 0.2% or less. And if you look at that on an annualized basis, the Fed's at target. So I think they're going to be, debating whether or not they see cracks in the labor market forming or not. And if inflation is at their target on a 3-month annualized basis, are rates too high right now? So it's going to be really interesting to see how the projections come out, and specifically comments from Fed Chair Powell.
Well, we will have those answers in 48 hours. Thank you so much, Colin. We appreciate your time. Again, that's Colin Martin, the Director and Fixed Income Strategist at the Schwab Center for Financial Research. Coming up, we've got our closers panel. We'll recap today's session, and we'll get you ready for tomorrow, next on Market on Close.
Trading at Schwab is now powered by...
Nada importante, a ver.
Analyst Ivy Zellman on CNBC Friday said there is not a lot of good news to report and the stock will likely come under pressure. We do know that builder sentiment is at its lowest level in more than 2 years. Buyer demand is weakening, and the mortgage rate picture is not improving. The average rate on the 30-year fix started Lennar's Q2 March 1st at 6.74% and went up from there, really hovering right around 7% for much of April and May, and even now. Add to that all the economic uncertainty surrounding tariffs and inflation. While the builders can buy down interest rates, some borrowers just aren't qualifying for loans even at those lower rates. We'll be watching specifically for pricing and backlogs. Even though housing starts have been dropping, the builders still need to unload a lot of that supply they've already built. Scott?
All right, Diana, thank you. That's Diana Olick, and we'll watch for her when Lennar hits the tape in just a little bit. Watching rates today, too. I know you are, as many market participants continue to.
They firmed up. So, maybe not the greatest auction, a small auction of 20-year treasuries. I still think we're okay because we're short of those kind of scary thresholds that really destabilized the equity markets before, but we're not far from them, right? We're under 4.5 on the 10-year. So I do think that, the way that retail sales come in and the way that the Fed outlook characterizes how restrictive or non-restrictive they are is going to be relevant to all this. I think it's interesting we have this very widespread eye of the beholder. Is the economy, strong with good momentum, or is it actually kind of at stall speed and we need the Fed's help? Bank of America says no cuts this year. The economy is going to surprise to the upside, whereas you have folks like Renmac and others, Morgan Stanley, feeling like we got several cuts in train. So it's a legitimate debate, and I think it just tells you something about this in-between moment where you can have your own interpretation of what the influence of policy is going to be on the real economy.
Well, let's see what oil prices do as well.
Yeah.
Oil getting off the burner from Friday is in a happy place for the Fed. Like they don't want to get into a situation where they're trying to assess everything and, now we have to think about oil going to $100.
Yeah, fleeting pop up to the mid-70s per barrel is not going to change the equation in terms of headline inflation down the road. Then we don't have to have the debate as to whether we should be ignoring that or not. But yeah, look at the inflation forecast embedded in the Fed's dot plot. Retail sales tomorrow. Again, you're going to get a little bit more fresh data on the consumer. The consumer has the capacity to spend. Savings rate went up in the early part of this year. Did they actually do it last month? That's one of the things we'll find out.
Big part of their money, as we learned today, in the stock market and equities, and they continue to run within 2% of a new all-time high. We'll go green across the board. Nice comeback for stocks. Overtime with John Ford.
Cerró la bolsa.
That bell marks the end of regulation. TK ringing the closing bell at the New York Stock Exchange. Marine money doing the honors at the NASDAQ, and stocks are higher across the board. Markets rebounding from Friday's losses on hopes the conflict between Israel and Iran won't boil over further. That cleared the way for big tech to resume its leadership. Meta jumping as it'll put ads on WhatsApp. AMD soaring on a Piper Sandler upgrade on bullish expectations for the GPU business we talked to Lisa Su about Thursday. NVIDIA and Broadcom also gaining. Oil moving the other other way after spiking last week. Energy, one of the worst performing sectors today. Defense names also pulling back after a recent rally. Lockheed Martin, Northrop Grumman, and L3 Harris all lower. And we're seeing weakness in consumer staples. All these names hitting 52-week lows today. Brown-Forman, Campbell's, Conagra, Kraft Heinz. You see Brown-Forman, their lowest since 2013, a 13-year low for Campbell's Soup. And U.S. Steel higher as President Trump approves the company's partnership with Nippon Steel. The U.S. government will get a so-called golden share in the company with some unspecified but significant oversight. That's a scorecard on Wall Street. Welcome to Closing Bell Overtime, where winners stay late. I'm John Fort. Morgan Brennan is off today. Ahead, trade deals in focus at the G7 as world leaders meet. Can we expect any progress? And the tech trade seems to be...
Tenemos tratos con Canadá, bueno, Estados Unidos y Canadá, que es todo lo en relación a aranceles.
Issues ahead. Well, let's start, though, with the Middle East. As we mentioned, stocks jumped today on hopes the Iran-Israel conflict won't further escalate. Let's get to NBC's Matt Bradley in Tel Aviv with the latest. Matt.
Hey, yeah, John, we have seen a lot of escalation. We've been seeing back and forth volleys for the fourth day now with a rising death toll. And while we've been seeing that a lot in Iran, more than 200 or nearly 225 people dead, this according to Iranian state media. The death toll here where I am in Israel has also been spiking, actually raising by orders of magnitude each night. And that is troubling considering the weapons that Israel bring to bear defensively, especially the Iron Dome system and its other plied systems for swatting out these projectiles that Iran is firing. The Arrow system, David's sling, all of these designed to really put a bubble around Israel. And so far, we're still seeing missiles and weapons coming in and inflicting casualties and injuries and destroying buildings. So this is something that a lot of Israelis probably are surprised by. They're used to being in this cocoon of security, but we're also seeing the Israelis escalating on their attacks in Iran. We've been seeing them now striking Iran's economic lifeline, oil fields, oil facilities, gas fields. This was something that they have.
Bueno, seguirán hablando todo el día de eso hasta que haya negociaciones, que seguramente será esta semana. Fue un buen día en bolsa ahora que estoy registrando las ventas. Mañana veremos el resultado de Lenar de ingresos. Como le fue, parece que le está yendo bien, la acción no se ha caído. Veremos qué pasa con las tensiones allá en el Medio Oriente, en Asia, y veremos el resultado de Ethereum para ver cómo iba eso. Eso es todo, amigos. La verdad es que fue un directo muy corto. Mañana habrá otro, ¿va? Eso sería todo, amigos. Gracias por estar aquí. Chao.